Recording. All right, I want to welcome everyone to our Franchising 101 Small Business Ownership webinar. I'm going to start off with a little blurb on SCORE in case you aren't familiar with SCORE. SCORE is an organization that helps small business owners. We do two main important things. One is training and one is mentorship. Our training comes in the form of mostly webinars, but occasionally we do throw in a few in-person workshops for different topics. We are always adding new presentations and new business topics. Plus we revisit some of the, beginning old favorites, business planning and startup, etc. So I definitely encourage you to check out or watch for our newsletter and to check out the website, and I'll put that information into chat for you after my little blurb here. The most important thing that SCORE does, however, is the mentoring. Our mentors are volunteers, and thus mentoring is always free. It is confidential. Our mentors have a wide variety of experience and knowledge that they want to share with the small business community. And we work with folks at all stages of the business. We work with those that are trying to decide if small business ownership is right for them. We're working with those that are in that planning phase, getting everything together and ready to go. And we work with those that are already in business. They come to us for a variety of reasons. Perhaps they're in a growth spurt and they want to make sure they're managing that correctly. Perhaps they need help with marketing or managing their books. Anything you can imagine, we have someone that can talk to you about that topic. So I encourage you to look for a SCORE mentor if you don't have one. Super easy. Just go to score.org and there's a little box for type in your zip code and they'll match you to the chapter nearest you. There are chapters throughout the entire United States. You can also go to the local chapters in the Massachusetts, Rhode Island area. I'll put those direct addresses into chat here shortly. While you're there looking for a mentor, you can also check out the library section. You'll find templates you can download and little presentations and topics and blogs and everything you can imagine. So definitely a lot of resources available to you. You can also just put a note in chat and I can also reach out to you and assist you should you want a more personal approach to that. We are going to keep everything in chat today. So if you have any questions for our presenter, go ahead and throw it into chat and we'll make sure you get your questions answered. So that's all I have on my part. So I want to introduce you to Dana Hall from FranNet. He is going to give you everything you need to know about owning a franchise. Very complete and he does a great job. So welcome, Dana.
Thank you, Teresa. I appreciate it. And I'll give you a little introduction of who I am first. I am local here in the Boston area, born and bred. I have 25 years of experience in franchising, mostly on the corporate side. I was in corporate finance for a number of years, but I had roles in operations and marketing, and currently in a business development role with FranNet. So been around the franchising space for a good 25 years. Again, and local to the Boston area. So the resource here right on the ground locally. So thank you for coming. I appreciate you spending some time with me. Who is FranNet? What do we do? So we are almost a 35-year-old franchise consulting firm, about 100 folks in different markets across the country. And I want to reiterate, or at least reinforce what Teresa had said about SCORE. SCORE is one of our most important partnerships. We've been partners with SCORE for a number of years. A true hidden gem. If you think about big companies that spend millions of dollars on consultants, think about SCORE for your small local business as that consultant. Highly recommend connecting with a SCORE mentor. These people have tremendous experience, years and years. They're former executives in many cases. And it's the best deal in town because it's free. So you really cannot go wrong to get, high-end professional advice and guidance for free. So FranNet works with a number of top quality franchise companies, and I'll explain how that works in a sec. So real quick, what we do, what my role is today, it's just education. But for clients, what my role is to provide information, to educate, to offer options, to help people understand what their options are in franchising. And ultimately, for a truly engaged, interested client, we're matchmakers. We're going to do a profile. I'm going to explain this later. We're going to talk about your goals, your needs, your wants, and see what franchise fits that. There are great franchises that we all know and love and we use, but they may not be the right business for a particular person's skill set and background. So my goal and my role at FranNet is to help people figure that out, navigate that, and make the right choice. And sometimes the right choice is not to be a franchisee, to own a franchise at all. And that's why, we always say we don't sell franchises. We help people navigate and educate and guide and possibly purchase, but we don't sell. We do all this for clients at no cost. The franchise companies pay a commission should somebody want to be a franchisee and do the diligence and make a purchase. So there's no cost to a client to work with me to get that advice and guidance. I get paid by those franchise companies. So it's really a good deal for everyone. So that's the background. What are we going to do today? About 45 minutes. I'm going to talk a little bit about, from what we see, why do our clients, do this? So maybe this can be a help to see, if this is something that resonates with you, if this is the situation you're in. So I'll talk a little bit about that. We'll talk about your options. We'll talk about some myths and hopefully debunk a few of those and replace those with the realities. And then I'll talk about that process for identifying and deciding, what would fit you. What are those steps? We'll talk about that. So of the thousands of clients that FranNet has had over the years, I've been working with FranNet for 5 years, but again, that's a 30-year franchise consulting firm. So there has literally been thousands of people we've helped purchase a business. And what do we hear over and over again about why people at that point in their life are considering? So the success, that's a subjective term, right? It could be different things to different people, but what we hear over and over again are these few really common themes. Don't want to get laid off anymore. They want more control over their schedule and their time. They want to be fulfilled in their work, whatever that is, whether it's working for somebody else or working for themselves. Flexibility is probably the thing I hear the most. And I've worked for somebody, a company or whatever it may be, and I just don't have the level of flexibility in terms of my time, the things that I want to do, the areas of the company I'd love to be involved in, I can't do it. Independence is a component of that. And frankly, money. I want to be able to, work for myself and better myself and not make money for somebody else. So these are very common themes that almost, some version of 2 or 3 of these things, almost every client that comes to us, these are the things that they talk to us about as why they're considering it. And so, this is that open-ended question, what is it for you? And, only you can answer that, but just want you to know that these are very common themes here as to the why. So there are a few questions here, Teresa. Should I check these out?
No, go ahead. Yeah.
Sorry. So what are the options? Okay, I want to be in business for myself, better myself, work for myself. What are the different avenues for that? Starting something on your own, buying an existing business that's not a franchise, or being a franchisee, investing in a franchise business, and having a partnership with a franchise company. So what are some of the pros and cons of this? So if you were to start your own business, this is America. This is, from an economic standpoint, a lot of what we're founded on. entrepreneurs, people having that passion to strike out on their own. So what are the advantages? Control, decision-making ability, great for people that are creative, that want to build something on their own, that don't like rules. Certainly, you would be the one creating this, so it's the largest upside. You're not sharing it with anybody, and oftentimes you can truly build that business from what you're passionate about. Some of the disadvantages, and again, this is not an exhaustive list, but some of the advantages are also the disadvantages. It can be very daunting. You got to wear all the hats, at least initially, right? So you got to, with all that control, there's all that responsibility of figuring a lot of things out on your own. So you got to create all the systems. You're probably going to have a slower ramp up because you're going to be making small mistakes and figuring out and correcting and iterating. So it takes a little bit longer. Financially, it can be a little bit more difficult than working with an established business or an established partner company like a franchisor. And relatively speaking, there is a higher failure rate, especially in certain industries, restaurants being one of them. What if I bought a business? A lot of pros and cons here. If it's a stable, profitable, well-run, good business, it ought to have cash flow, goodwill with customers and employees. It's going to have, obviously, because it's operating, it's going to have actual financial results. So that's good from a diligence standpoint for a potential buyer to know how it has performed. And it also is advantageous to lenders to have that track record. So tax returns and profit and loss statements and cash flow statements and all those sorts of things. So actual financial results is an advantage because it is attractive to lenders. There, again, should be in a good business, a market established with customers, maybe even some employees in place. And hopefully that owner has, documented a lot of the systems that has made he or she successful. So on the good side of buying an existing business, those are some of the key things. On the bad side, well, if it's not that kind of business in terms of, good cash flow, goodwill with customers and employees, and these could be difficult things to really know from the outside looking in. That these could be some of the disadvantages. Again, same thing with the advantages. What is the financial footing of this business? Are you going to lose employees? How do I price it? That's really difficult for the average person to know. What should I pay for this business? You need professional help to sort of figure that out, but that can be a real difficult thing to determine. Do they have good training systems? The real big one here for me is, why is somebody selling that business? There are obviously some really good legitimate reasons. A retirement, I have to physically move and I can't take the business with me. Sometimes, unfortunately, there's a health issue. Sometimes, people create and build businesses to sell to make money, right? They've built that business, they want to pay out, and they parlay that into some new effort. So that's a legitimate reason. But for somebody just looking to get out, maybe this business is in jeopardy, it's performing poorly, so you just got to be really careful why somebody is selling that business. And the final thing is a franchise. So what are the pros and cons here? Again, not an exhaustive list, but some of the top reasons or the top attributes. You have, in many cases, name recognition. You have some intellectual property around it, so trademarks and marketing and websites and things that you're buying into an established, legitimate, existing business. So they should have. Again, you're going to be paying a royalty for this, and I'll get into that later, but a proven business system. This is a business that should be vetted, that should have great structure in place. It's been proven out, and you're, as a franchisee, are plugging into that business and operating it. So great training. It ought to be lower cost, relatively speaking, because you're not sort of making that trial and error series of mistakes I talked about earlier. Great financing options in most cases, because these franchise companies are known to lenders because they have other franchisees and even company locations, so they know what they're lending against. You have a franchise family in both the franchisor, which is the parent company, and then other franchisees. These are people that are going to be your peers now. So you can, talk to them, learn from them, collaborate with them, all those sorts of things. So you're not, doing this all on your own. You're in business for yourself, but not by yourself. You have these two other partners in the franchisor and other franchisees. I'm going to talk about disclosure in a second because that's another huge advantage. There's a lot of documentation that you will be provided so you can learn if it's appropriate investment for you. So disclosure is a big one. What are some of the disadvantages? Not a franchise for every concept or every industry. They do tend to have very structured systems. That's sort of the nature of the beast. So if you're that creative person and you like to do things a lot on your own, you want to iterate and reinvent the wheel and all that things, franchising might not be the best thing for somebody that favors that sort of business where they can do whatever they want, so to speak. Territory restrictions, that could be good or bad. It protects you, but also could restrict you. So each company is a little bit different. You can only sell their products. And the trade-off here, for all of everything that's on the left side here, the proven business system, the training, the collaboration, the systems and the structure, there's a royalty payment for that. So you're going to pay a franchise fee and an ongoing royalty payment, off of your gross sales. So there's a trade-off to all of this help and structure. It has to be paid for. I get this question all the time, and it's a great one. It's a legitimate one. Going back to starting a business on my own. Well, why wouldn't I just do a sign company or a consulting business on my own? And you can, and many people do. And for some people, that's the right thing. But these are just a few of the questions that, day one, okay, now you're in business. What do I do with all this? And this is what a franchise offers because they've been doing it. They have other franchisees. It's a business. It's already been developed. They've got a hiring system. They know how to target customers. They've got websites that you can copy and be a part of. They know how to negotiate and oftentimes have, supply chain systems already in place. They're going to, you're going to know how to price the product. I mean, I could go on and on, but you get the point that there's a lot of things to think about. What kind of insurance do I need? Do I have any training manuals for the employees that I'm going to have in whatever business? I got to create all those. Those are already there with a franchise. So these are some of the things initially, walking into a business. If you did it yourself, you need to create. If you're a franchisee, that will be part of what you're walking into. You'll be provided all this, most of it. So really, what is a franchise? I mean, probably should have moved this slide up. What exactly is a franchise? What is the definition? Pretty simply, it's a license to use a business system, names, trademarks, products. If you think about the big companies we all know, a lot of them are food. We'll talk about that later. But it's you're walking in and you're being provided this infrastructure in exchange for an initial franchise fee and ongoing royalty payments to the franchisor. So that's the agreement. That's the trade-off. So a franchise, is a legal designation. It's something that's overseen by the Federal Trade Commission or the federal government. So part of that is this franchise disclosure document. So the government has created this system to help people be able to do the diligence on a franchise. And so when I said earlier about disclosure, what does that mean? Well, if you go buy an existing business, XYZ, pizza shop on the corner, that's all that information you're going to have to find. And you have to talk to that owner and there's a certain level of trust of what they're telling you. So it's, there's not a formal way to disclose you and to give you all the information about what you're investing in, what you're buying. With a franchise, it's a little bit different. It's a little more structured. This franchise disclosure document is something that the franchisor would give a potential franchisee, you, that the investor, the owner, to help you make that decision. So what's in it? It's going to have a whole bunch of information on time in business, who operates the company, what's their experience, have they ever filed for bankruptcy, have they ever been sued? So again, disclosure, not stuff you have to go digging for. Each company that is a legal franchise in this country has to file this document and update it every year. So it's always fresh information. And again, it's very much like a prospectus if you're buying a financial product like a mutual fund or a stock or a bond. So it's going to provide you all this information as a potential investor or franchisee. What are the costs? What's the franchise fee? What are the other fees? What are all the costs of the different line items to get into this business? They're going to give you, in a fairly tight window, how much it will cost to invest in and get this business started, open the doors, and operate it. So that could be for a service business, that doesn't have a location and a lot of equipment. It could be $100,000 or not between 90 and 110. They're going to give you a range. You're going to know pretty tightly what it's going to cost to get into this business versus, something with the building. It could be, $1 million. So you're going to know that by looking through this document. What are the royalties? How are they paid? When are they paid? What's the percent? Obviously, the franchise contract will be in here within that document. How do they define the territory? How am I protected within that territory? And a lot of other legal information I won't get into. Just suffice to say, this due diligence process is available to you through this FDD as a potential franchisee. The big difference out of all of this, I think one of the most important things is you get to talk to and have access to other franchisees within the system. This is called validation. So there's a list in this document of all the current and past franchisees. So as you go through this process of learning and determining whether, said franchise company is of interest to you, at some point, when you're more serious, you'll get to talk to other franchisees in the system and ask them about their experience. And that could be very powerful to help you make it a yes or a no decision. What is their experience? How does the franchise support them? Are they making their money they'd hoped? Are they happy with it? All those sorts of questions. So really powerful information. So disclosure is a pretty big differentiator in the franchise space to help you make a decision. So just looking at that chat, we'll answer that for sure at the end. So myths, what are some of the common myths? And the first one, this is no particular order, but this probably is the biggest one. It's just all food and retail. And certainly that makes up a big part of franchising. But what I want people that are potentially considering this to know is it's just not food and retail. It's just not the things that you see driving around that are bricks and mortar, location type businesses. Certainly a lot of that, probably a third of the whole, franchise space is food and retail. But there's over 3,000 franchise companies in dozens of industries with many more operating units than just the food and retail. A lot of business-to-business services, personal services, a lot around the home services, commercial. So some of these concepts are, location-based, the sign on the building and so forth. But there's a lot of home-based businesses that are true businesses. Sometimes you hear multi-level marketing, or I only work out of my home and it's internet-based. And, a lot of that is not truly franchise. But if you own a residential cleaning business or a digital marketing firm, These are all legitimate home-based businesses. So suffice to say, it's way more than food and retail. And here's some other sectors. Senior care services is huge. Damage restoration, again, not a location-based, but more territory-based. There's a lot of business-to-business concepts. So far more variety than just food and retail. One of the things that we always wonder is, does a franchise or any business succeed and is wildly successful just because they have the best product? And certainly you want a good product, or we want to be proud of the product. But if you think about a lot of what happens in franchising, and to pick on McDonald's a little bit, do they have the best hamburger we've ever had? No, but they're incredibly successful. Why? Well, first of all, it's functional, it serves a purpose, it's convenient. But beyond those components, how did they replicate this 13,000 times and become such a successful business? It's because they are so good at all these other systems. They've really documented and outlined, and they have a system for everything, and they know how to execute it. So they're great marketers. They have tremendous training. A number of McDonald's, and this is true with a lot of those big companies, a number of their executives, worked as a teenager on the line as their first job, or, they were assistant manager in training and they worked their way up. So they're tremendous trainers, really skills in things like real estate, site selection, and where a location should go. Excellent sales folks, and all of that, logistical, operational things they're really good at. They know how to replicate systems. They know how to, be efficient and effective. And certainly all the back office accounting and other back office services. So, franchising is only partly about the product. It's about the other systems on a day-to-day basis and being able to execute them consistently. That's what makes a franchise concept really successful. Another kind of thing about franchising, what it isn't, is frankly, terribly innovative. That's not what makes franchising successful and different. Not, creating new products like the iPhone or anything like that. What franchising is and how it's successful is goes into markets where there's competition, not solely, but that's where the market for the product or service is. So you want to go where the people are, where the market is, where the trade area is, and then be able to take the market share from that market that you can. And franchises, again, execute very well. McDonald's doesn't have 100% market share of quick service food. They just know if they go into a trade area and there's 5 or 6 other competitors, they're going to get their piece of the pie because they know how to execute. And the market for their product is there. And so that's how franchising wins. You have multiple locations, each one of their trade areas. And when you execute well, you'll take your market share. Another very common one. The last two are a little bit more vague. This one, everybody thinks it's $1 million to own any franchise. I got to be really wealthy to be a franchisee. And it's actually not true. It's all relative, but about 65 to 70% of the companies that my clients would work with through FranNet are in the $100,000 to call it $400,000 investment. So again, that's a big number for some people, but I think the common misconception is that everything is sort of a McDonald's or a Panera or Wendy's or whatever. And those are very expensive, right? There's buildings, there's equipment, there's real estate. They're always going to be over $1 million. Well, that's that end of the spectrum, but many, many quality, good, successful franchise companies in that $100,000 to $400,000 range of investment. So it's often more approachable than people might initially think. There's a misconception about how it's always, in every case, very expensive. So a quick side note, what would that look like if you were to invest, it's very similar to a home, right? Most people don't buy $500,000 homes in cash. You typically have a down payment and a mortgage, and it's very similar with these small business. 25 to 30% liquid, your own cash, and you can often finance the rest of it. So this is a pretty typical scenario with a lot of my clients. Some of the truly lower cost concepts, sometimes people pay all in cash, but in most cases, there are good financing options, and so you don't have to have it all in a bank account. And so where would it typically come from? Again, obviously, always personal savings. I joke the rich uncle is always a good thing to have, but the reality is something like a home equity line of credit is very common. A securities-backed line of credit, which is just a fancy way of saying I'm going to borrow against a stock portfolio, or stock or bond portfolio. Instead of selling it, I'll just borrow against it. Resale sometimes is seller financing. The one that most people don't know about is this last one. And I'll be real quick with this, but it's the ability to utilize a defined contribution plan, 401k, your IRA, 403b. My wife's a teacher, so that's the nonprofit version of a 401k. The IRS for 40 years has allowed people to take money from those accounts to fund a business tax and penalty free. So if you took money out to vacation, to fix your home, whatever you wanted to do with it from a 401k or an IRA before you're 59 and a half, you would be penalized for that and taxed on. But if you take it out to open and finance the startup of a business, no tax or penalty. There are some costs for the companies that do it, fairly minor, but IRS approved, tax and penalty free. And the reason for that is they want for people to invest, to create jobs, and to grow small business. So it's an incentive for folks that don't have the other means to actually do that. These are just some companies that have been around a long time that do that sort of financing and walk you through it. Another very common myth is that, hey, the more I'm able to invest, the more I should make. And that's a reasonable assumption, a reasonable expectation. However, I never want folks to come in to an investment or a situation and assume that, because there really is no automatic correlation between what you'll invest and what you'll return. And I worked for restaurants for a number of years, so I can pick on them. Those are among the most expensive franchise investments you can make. And restaurants in general are expensive, and they can fail. So just because you invest a lot doesn't mean it's automatically going to be successful. On the flip side, just because it's not $1 million or $500,000 investment doesn't mean that it can't be lucrative. And I go to a lot of the service businesses that don't have a lot of equipment, don't have a lot of overhead, don't have a location. I always go to, again, residential cleaning, like a Molly Maids, if you've ever heard of Molly Maids. They come in and they clean your house. The more clients you gain, more people you can hire, more houses you clean, more you can make. And it's not going to cost you anymore. It's not an additional building. Those businesses over time can be very lucrative on a very reasonable investment, less than $150,000. So no automatic correlation. It's more about the business, how you execute it, how hard you work at it, than it automatically is how much you invest. And probably my favorite is that it doesn't require somebody to be an expert in the actual skill. So if you own Meineke, folks that fix your car, there's oftentimes a misconception that I need to be a mechanic. If I own Great Clips, which cuts men's hair, I should be a barber. Could go on and on, right? The reality is most times the franchise company doesn't want people with that experience because they come into it thinking, oh, I've done this. I know how to do this. I owned a shop before. I want to do it this way. What the franchise companies really want is people that, first of all, are willing to use and will use their system, and then be the owner with these other transferable skills. Can you hire folks? Can you train folks? Are you a good business developer? Can you financially manage a business? Do you understand what a profit and loss statement is and how to manage that? They want those sorts of skills because you're an owner, not a doer. The people that are going to fix the car and cut the hair, you're going to hire them. Those are the individual skills for the business. The owner should not, almost all the time, should not be the person executing the business on a day-to-day basis. They are, the mini CEO. So they want people that have those transferable skills that are going to manage the business and grow it, and not be the one in it every day. And again, they'll train that person, not to be a mechanic, but they'll train owner on the system and how to best execute. So what are the couple of different options of being a franchisee? So first, most obvious is just, this is going to be your full-time gig. And so you're involved in the business, full-time on a day-to-day basis. That doesn't mean, like this gentleman, that you're out, actually doing handyman work, but you're actively in the business every day. You're hiring people, you're meeting with clients, you're networking, you're training people, you're financially managing the business, you're helping to grow the business, you're in it every day. And yeah, part of the time you might be, in the truck or at the front desk, when it's necessary. But by and large, you're working on the business to grow it, and you're in it full time. So this is very typically those that have either left the workforce, semi-retired, just looking for a change. But the point is, they're going to be actively involved in the business in one way or the other on a day-to-day basis. The other option is, there are companies that don't necessarily want the owner every day at the one location or in the business. They're looking for even higher sort of level oversight. So true executive model, where you have managers and people in place and you're working through them, you're managing them. So oftentimes folks have full-time jobs that own a semi-absentee business. So this becomes a supplemental income, a different way to generate wealth, a side gig, so to speak. There are people that, maybe they either have rental property, or they're like, rental property is a great way to supplement my income, but I don't want to be a landlord. What's another way to generate income, but not do it 50 hours a week? Well, a semi-absentee franchise business could fit that. So, and then there's a whole host of stuff in the gray area. A lot of people, can start out with a semi-absentee business. They're still working full-time. Maybe they open a second or third location and they say, now I can insert myself in that business and work it full-time and be one of the people, there every day, and transition out of much. So this in between too, but your owner-operator and your semi-absentee are the very common two ways to be a franchisee. So trying to think of, okay, again, is this me? Could this be me? If you're thinking about that out there. So this is just, no names here, but these quick profiles of a handful of clients that I've worked with. And so these people come from all walks of life. Sometimes it's just one person. Sometimes it's a husband and wife. You got people that had white collar, backgrounds that buy blue collar type businesses. It's really about the process of finding out what fits. So people come from, again, all walks of life, and they buy all different types of businesses. And that's where somebody like me comes in to figure out what would be appropriate. point of showing you this is just to say it's not just one type of person with one type of background. It's very diverse. So again, the real key is with a franchise concept, you are in the business for yourself, but you've got those other, like I had mentioned earlier, those other two constituents in the franchisor and other franchisees to help you. So great, it's a great way to be in business, especially for somebody that's never done it. So the last part of what I want to talk about is, okay, I've heard all that. I got sort of a 50,000 view understanding of franchising. There's so much to learn and know. We could never do it in 45 minutes to an hour, but hopefully I gave you a taste of what it is and what it isn't. So, okay, what does that look like for me? What would my next step be? How do I think about this? What are some of the things to initially write down on a piece of paper kind of thing to get started? And I always start with, really take a mental picture and note of what the business does versus what I want to do in it. This is so key. Knowing what you as the owner, what your role in the business is going to be is critical. And my example of what does that mean is always, I work for Panera Bread. I've worked with a lot of bakers, met a lot of bakers. They're very passionate people. They love what they do. They get up at 10 at night to go to work and leave at 6 in the morning. You better really love it. They love the fact that their hands are on dough and they're creating and they're baking. And a lot of those folks would say, hey, someday I'd really love to own my own. And that's, it's a common thing to want to own a business and what you love. Once you become a business owner, you really gotta realize, am I actually going to be baking? If that's what I truly love to do, because an owner of a bakery is going to be hiring people, going to be training people, going to be ordering the food, checking in the food, dealing with the landlord, dealing with customers, financially managing the business, marketing it. I mean, all these things, and the next thing you know, none of the things they're doing on a daily basis is baking, which is what they love. So be real clear on what the business does versus what you as the owner will be doing on a day-to-day basis in the business. That doesn't mean you can't own a bakery and be the baker. Absolutely do that. But somebody's going to be doing all those other things that makes the business run and run successfully and run profitably. Make sure you define that first and foremost. Second thing I suggest people do is make a little self-inventory list of what's important to you. And this is the why. Why am I even considering this? What's missing in what I'm doing now or what I've done? Whether it's another business, whether it's a job, whatever it is, why am I even considering this? What is my why? So is it about, more time? Is it about the independence and control? I get a lot of people that say, hey, I've never really had a purpose like in my community, and that's important to me. I've lived here for X number of years, and I've never inserted myself in the community. Maybe that's a driver or a reason. So sort of do some soul searching and decide what are the whys and what would a business fulfill for you that's not there now. Real key. Third thing would be more practical. Now it's, okay, I kind of know what I want to be in the business. I kind of know what my why is. Now, what do I bring to it? And this is all about the matching process. Now I've got to determine from my past, my experience, my career, what are the things I do really well? And how am I going to use those and apply those in a business? So is my wheelhouse, business development, sales and marketing sort of functions? Is it I'm incredibly good at client issues, customer service, solving problems, keeping clients happy? Is it more I'm really great at training people, hiring them, developing people, building a team? So that sort of management, is it more on the financial side? Or is it truly logistical? I'm great at managing a process and operations, and I can go from left to right and execute a system. This is not an exhaustive list either, but you really need to do is say, okay, what are the key things that I'm good at and that I want to do? And then you find a business that needs those skills primarily. Every business needs to be marketed. Every business needs to be managed. Every business needs to be financially managed as well. But some businesses require one or more of these buckets than others. And so that's where you want to insert yourself into a business that's going to require those skills as a top way to success. And that way you can insert yourself that way, accentuate your skills. And then the last part about all of that is, what is the true day to day? Do I want to work with 2 employees or 20? Do I want a business environment where I'm wearing a suit or a polo shirt? Do I want a business that's sort of one location or a much wider territory or multiple locations? Do I prefer providing service versus a physical, tangible product? Do I want customers that are other business owners, or do I like, customers in the home, or what we call B2C, business to customer versus business to business? So again, these are all filters to sort of determine what kind of business you would want to be involved in. Get clients that say, "Oh, I only prefer business clients versus retail where people are coming in. I don't build a relationship." So another key thing to know how you're going to be spending your time, dude. So that's kind of what I had for just giving you a very high level overview of what franchising is, what it is not, some of the myths are, and hopefully that was educational around, I thought it was really expensive or not, and then some of the key things to consider.
Great. Oh.
Probably whetting your appetite more than anything. So I'm happy to answer any questions.
Yeah, thanks, Dana. If you want to anyone wants to put a question into the chat, or you can use the raised hand icon on your Zoom bar, and I can unmute you if you'd like to ask your question out loud. We're happy to do any of that. I don't know if you had any comments about the one that was already in chat.
I was going to read that right now.
Okay, great. So yeah, definitely it's the time now to get that question in or raise your hand and we'll get your questions answered.
Interesting. So I think the one thing I would say about that question about, it's already been in business for 3 years, but the banks still consider it a startup. It's a couple of things with traditional banks. They're often have appetites for only certain types of businesses. So this is the first thing to consider. A traditional bank that we all know, what I call a retail bank, they do business lending, but they often gravitate towards businesses that are already in business. They're looking to grow, that are and looking for more capital, working capital. They're adding a product line, adding a building, whatever. They're often not as equipped to do the startup. That's number one. And then within that, each bank typically has, again, I think I mentioned it at the beginning, they're more appetite for certain businesses. So some will stay away from fitness or restaurants, but like manufacturers. So it can be difficult as a business owner to know like which bank is going to want, my kind of loan or my kind of business. The companies that I had mentioned earlier that do the 401k rollover, the other thing that they're really good at and they do is SBA lending. Now, there's a lot of banks, traditional retail banks that do SBA lending, but again, they typically fall into that first category I just said. And oftentimes they only want to do loans above $500,000 or only for existing businesses. Those firms that I showed you before, they also assist with SBA lending. They're not direct lenders themselves. What they can do is they can take all your information and they can go through, and they have relationships with over 100 banks throughout the country. And they're basically, what I do for clients, they do for clients as well. They're going to match make. They're going to find a loan from a bank that has that appetite, knows that company, and is more likely to want to write the loan.
Okay, I do have someone with a raised hand. I'm going to unmute. John, you can unmute and ask your question if you'd like.
I see. So it says, can you help with veterans benefits?
Oh, he's got something in chat.
Yeah. So if you want to clarify that? So what I would tell you on veterans benefits, I'm not sure exactly what you mean by that, but I will tell you probably a third of the companies that we work with will offer discounts to veterans on the franchise fee and sometimes some of the other costs. So, and there are several franchise companies that, really target, if that's the right word, veterans. They like to profile the veteran. So franchising overall is a pretty vet-friendly industry. Obviously, some companies more than others. But in terms of, benefit to a veteran, it's mostly going to be in the form of potentially a discount on some of the costs.
Okay. Great. Sinead, I probably have brutalized your name there, but you can go ahead and ask your question.
Can you hear me okay?
Yes.
Yes.
And you actually didn't hack my name. You pronounced it perfectly.
Yay.
So I wanted to find out about funding. Is a down payment absolutely necessary? Or, there's like nothing out there for like 100% financing. Yeah.
There are a few companies that have programs where it's still going to be a down payment, but this is going to sound convoluted, but it's almost like they will help fund the down payment too. So there are a couple of options and programs with a couple of companies that we work with, but it's really, by and large is going to be some requirement. I call it skin in the game. I mentioned on average, 20, 25, 30%. There's a couple that are smaller than that, more like 10%. And then there's a handful that could assist with 100% of it, but it's pretty small.
Any recommendations when it comes to that? If you do, can you put it on the chat?
Well, I wouldn't be comfortable just throwing companies' names out.
Okay.
I could certainly talk to you offline, and that would all depend on, are you approved and all that sort of thing.
Right.
So.
Thank you so much.
Sure.
Okay. Well, I don't see any other questions posted. So we'll go ahead and wrap things up. We do have Dana's contact information there on the screen, or you can reach out to SCORE for sure, and we can work with you as well. I see. Did you want to? It looks like she's put her contact information, Dana, if you want to grab that out of chat.
Got it.
To us. Okay, great. Let me I'm going to throw my email in here just in case. If you want to reach out to us that way. And thanks everyone. And you all have a fantastic Memorial weekend. I hope you can get outside and enjoy the great weather. Thanks everyone.
Thank you.
Thanks, Dana.
Appreciate it, Teresa. Bye-bye.
Bye.